Hey guys, I'm Barry Page with Legacy Money, the show that shares the truth about money and how it really works so you can live more, give more, and leave more. My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money. But at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. In today's episode, we're going to be discussing personal economics and the difference between your personal economy and the national economy. What you can do on a micro level to control your finances. So let's get started. So when we talk about our personal economy, this is what we can do with our money on the you and me level. Our family, our personal finances, our businesses. These are things that we can control. At least the cash flow or the banking function in our finances. Now, just as important as control is defense. We believe in playing defense to protect ourselves from these outside sources, from predators, things like taxes, interest, and fees. What can we do to protect ourselves and our money from predators? So in talking about control and protection, we have to look at the environment. Where are we storing our money? Who is in control of that asset? And what can we do to, again, protect ourselves from these predators that are constantly eroding our money supply? As for the environment, my mentor Nelson Nash always said, you can't fly an airplane in a vacuum. So our money is the same way. We need to be able to control that environment, where it's stored, which we have all the ability in the world to do, and we can control the banking function. In other words, we need money to live. We need cash flow. And if we can learn to control how that money goes in and out of our storehouse, our warehouse of wealth, Nelson Nash's second book, we can control the environment. When it comes to risk, we've all been told that we should invest in the stock market. Now, I'm not saying we shouldn't invest in the stock market, but the problem is most people have their entire savings, if they are saving, if they are investing, tied up in a government plan in the stock market, whether it be mutual funds, individual stocks, it really doesn't matter. There's volatility, there's risk that goes along with that. And we have to look at where we are in life. Do we have time to make up the losses? So this depends on your age and your income and many other factors, but we have to be able to control this asset, whatever it might be. And without that, we could lose money. So we, again, focus on defense. We believe there's more to be had by protecting yourself from the losses than by trying to pick the winners. And then, of course, there's fraud and corruption. We have to look no further than our recent elections. And you just have to ask yourself, do you really want the government in control of your money? For instance, it really doesn't matter if it's Republican or if it's Democrat. These are politicians that are doing everything they can to monopolize the monetary system, to take control of your money and of your life. There's an excellent book by Murray Rothbard entitled, What Has Government Done to Our Money? I'll link to it in the show notes. Definitely a good read if you want to learn about the government and what they've done to our monetary system. So there's some other things that we should also be aware of, and that's misnomers. Many companies, groups, organizations are mislabeled. Their names do not represent their ultimate cause. And Nelson Nash used to actually do a quiz on misnomers that I'll cover in another video. But just understand that many of the things that we hear that are portrayed in the media do not actually represent what these causes, groups, organizations, businesses really are or really do. In discussing our personal economy, we think about money, the exchange of money, and we should always consider why we want to create more money, create more value, create something to exchange for goods that we want to consume. And so how can we do that most effectively? What are some characteristics that we might look for in an account or a place that we would store our money? Let's take a look at some of these characteristics. If you had the ideal asset, the ideal account, we must first ask ourselves, why do we want this account? What do we want it to do? And how does it work? And many times when I ask this question, normally the first thing that comes out of people's mouth is, with this account, they would want a return on their investment, which is very important, obviously, but it isn't the most important consideration. If we think of some others, what else might be important in an account that would store money? Well, obviously, we'd probably like some tax benefits. That's how the government lures us into qualified plans. The promise of a tax advantage. Well, what is this tax advantage? Well, deferred taxes, maybe a way to postpone paying those taxes, which in the end, does that really benefit you? Well, accountants have trained us to think that it benefits us now because we get to deduct or defer paying that tax until later. But let's think that through a little bit. When is later, and what will taxes be when you go to get your money? Most people haven't quite thought that through. When I ask them, do you want to make more money in the future or less? Most people say more. Do you want your money to grow or do you want it to stay the same? Well, obviously we just talked about return on investment, so people want it to grow. Okay, so if your money grows and taxes increase, what good did it do to postpone, defer that tax? So a better tax advantage might be tax-free. Right? Tax exempt. How does that sound? So you never pay taxes on the money, regardless if it grows or not. So that might be a better opportunity, but obviously tax advantages are a characteristic that we'd want in an account. What else might be important? What if we could have our money give us multiple uses? So while it's stored in this account, it's actually providing multiple benefits. Well, what are some of these benefits? Well, people like liquidity, access to their capital, so that's good. That's why people store their money in the bank. And they think that it's safe, and maybe it is. It's FDIC insured for the most part on one single account up to whatever that limit might be that is set by the FDIC. I think currently it's $250,000 per account. So liquidity is important, having access to our money, being able to use our capital when we want it, when we need it. Now the problem with accounts like that is if they do actually earn a return, when you take the money out, you give up that growth on the money. So the money is no longer earning a return. So perhaps an account that continued to grow even while we were using it would be better. We had a use of the money and the money continued to compound uninterrupted even while the money is being used, whether it's on loan or whatever that reason or access to the capital was. So that would be a nice characteristic, to have liquidity, use, and control of the money in the account. Perhaps a benefit that would be important was that this money was safe. Now most everyone tells me that they want their money to be safe and secure, yet most people are invested in the stock markets. There is no safety in the markets, as we've learned in numerous crashes, recessions, and through volatility. What will the account be worth when you need it or want it to use whether it be for income, for expenses, or opportunities. What will the account value be? So security and safety of the money while it's in the account should be important. When we talk about multiple uses, what if this money was protecting us? Something that we normally have to go to a third party to purchase. Things like insurance that would protect us in the event of our death or in sickness. What if you had an account that protected you in the worst case scenario if you were no longer there? What if you had an account that would continue to grow even though you were using the money perhaps for long-term care, or maybe in your working years you became disabled? So an account that provided multiple uses, maybe some protection, definitely some savings, and return or growth of the money. So when we're talking about an account like that, there are very few that give you all of those benefits. Many can give you one or the other, but very few accounts offer all of those benefits. So what kind of account can offer you those benefits? Well, there's only one, and that account is permanent life insurance. We call it a private reserve, a place to store money. It can be used for banking. You can control the asset, and if you borrow money from the account, you can pay it back on your terms, and you also continue to get uninterrupted compounding growth on your money. So that's what a permanent life insurance contract account can do for you. Now, I must address the haters out there. The drive-by entertainers who love to attack life insurance and annuities. You probably heard Ken Fisher say, don't buy an annuity. Or maybe Dave Ramsey say, life insurance is a bad investment. You should buy term and invest the difference. Well, many of my colleagues have addressed these recent attacks on life insurance in their podcast, notably James Nethery, Caleb Gilliams. So you might check out their podcast for just some feedback on what's going on with the haters out there that are hating against life insurance recently. So we have to deal with that. We have to deal with that mental struggle that we go on when we have people that are attacking something that we're considering. And you know, the Bible tells us throughout that the world is evil, and you know oftentimes you're on the right side of things when it's being attacked. And you can look at our president right now. He's being attacked in all directions, yet he's done many things to help us in our personal economies. So perhaps life insurance should be looked on in a different light. Perhaps we should talk to people who own it, who have used it, and who have experienced great returns for themselves and for their families over the years. So life insurance can provide many benefits to our personal economy. And if you have a business, of course it can help you in your business as well. But I wanted to read a quote from Ludwig von Mises. If you haven't heard of him, Mises was a well-known economist of the Austrian School of Economics and covered it extensively. But here's what he had to say. A man who is forced to provide his own account for his old age must save a part of his income or take out an insurance policy. Such a man is more likely to get an idea of the economic problems of his country than a man whom a pension scheme seemingly relieves of all worries. So again, that's from Ludwig von Mises. I encourage you to study Austrian economics and maybe read a little of his work. You can go to Mises.org, MISES.org, to learn more. Something else that's very important when it comes to life insurance is that there's two types of life insurance companies. Now, there are literally thousands and thousands of life insurance companies in the USA. But there's really only two types, and that's stock companies and mutual companies. Stock companies are owned by the stockholders. They are publicly traded on stock exchanges. They may pay a dividend, but the dividends are not guaranteed. The dividends are paid to the stockholders. So they are emboldened to the stockholders. On the other hand, there are mutual companies. There's only a handful of mutual companies. Mutual companies are owned by policyholders. That means that the people that own the policies, the life insurance policies, the contracts, are in control of the company. They have voting rights and they are owners of the company as policyholders. Mutual companies also may pay dividends. These again are not guaranteed. The difference is that they pay the dividends to the policyholders. The companies that I work with have paid dividends every single year for over 100 years, every year, consistently. So that's a pretty good track record, and these dividends again are paid to the policyholders of the mutual companies. One other thing is that the monies invested by stock companies are invested in the markets or other risky places. Many times they are just gambling with your money. On the other hand, mutual companies are much more conservative. And really the biggest investment is the policyholders. Okay? So the policyholders are the assets, and that's why there's underwriting. That's why sometimes you may not even qualify for life insurance with a mutual company or a stock company for that matter either. But mutual companies definitely do insure their biggest assets, which are their policyholders, who have first access to the capital via loans from their policy. So this is an excellent way to store your capital, is with a mutual life insurance carrier. So here's why I love life insurance. First of all, it solves many problems. Problems with our personal economy, problems with our finances. Most importantly, it protects us and protects our family and our businesses from financial loss. But it's private. That means that it's not public record. It does not have to pass through probate upon your death. There's obviously some nuances there with age and wealth, but it's private at the end of the day. Okay, so it's protected, it's private, it's protected in most states from creditors if you're to be sued. So it's private, nobody really knows about it but you and your family and the agent and the insurance company that you're dealing with. So it's private, it's also centuries old, it's tried and true, it's been around for centuries. So life insurance is safe, it's secure, it's private, and it's been around for a while. It's also not correlated to the markets. With all the volatility that goes up, it goes down, it's based on mortality. So life insurance companies are looking 100 years down the road, and they're able to predict that. They don't have to depend on market forces because it's a long-term play. And it can be a long-term play for you, for generations, for your family. It's also owned by the wealthy. The banks own it, the corporations own it, and wealthy families own life insurance. So that should tell you something right there. It can provide long-term care for you in your old age. This is going to be our largest problem going into the next century. We're in the 21st century now. People are living longer. There's over 10,000 people every day reaching retirement age today, right now. 10,000 people every day. How are we going to support these people? So again, life insurance is a long-term play that can protect you if you live too long, if you die too soon, it's there for you. lately we've heard you have to trust the science. Well, let's talk about science for a little while. See, life insurance and annuities are based on actuarial data, statistics. So if you want to trust the science, let's trust the science that's been around for centuries. The science that's accurate, the data, the truth, that's what we can trust. So trust the science. As far as our personal economies go, we should strive to have flexibility, to have options, to have alternatives. So that's what, again, permanent life insurance can do for you, is give you options, multiple uses of the same dollar, having $1 work over and over again, creating velocities on your money. The V2 multiplier, I call it. The same thing that banks like to use, or that banks like to do, is turn their money. So life insurance and annuities can provide an alternative to traditional investing. And when I say an alternative, just an option, something else that you could do other than invest in the stock market and take risk with your money. This is just an alternative. It's not that you can't invest in the stock market, or you can't invest in real estate, or metals, or cryptocurrencies. You can do all of these things. Life insurance and annuities provide alternatives. And like my good friend Caleb Gilliams said, it's an and asset. Life insurance can be owned, and it is the only financial product that I'm aware of that can complete your financial plan and stand completely on its own. But it's also an and asset. So you can have these other assets and have life insurance. It's not an either or. You can certainly own them all and not put all your eggs in one basket. So let's talk about financing. Now, throughout our lifetime, we will spend a lot of money. It really doesn't matter what your income level is. We usually spend all of our income. If we save some of our income, maybe it's 10, maybe it's 20%, who knows? But we are going to spend upwards of 80%. Now, whatever these expenses might be, they could be taxes, they could be living expenses, they could be automobiles, that's irrelative. What I'm talking about is the fact that we are spending money. So what if we had a way to have that money that we're spending flow through our system first? You see, that's what the banks do. They want you to flow all of your money through their banking system. So if we can control that banking function and have the money flow through our system, then we'll be in a better position. Nelson Nash said that we finance everything that we buy. So whether we pay cash or whether we use someone else's money, we either pay interest to someone else for the use of their money, or we give up the ability for our money to earn interest because we're using it on that expenditure. Okay? So what do we spend money on as far as investments go? What if we were going to buy a piece of real estate? Now, typically, most people are familiar with mortgages. That's how you borrow money to buy a home, a property, as you get a mortgage. And some people might say, well, I was talking to a gentleman just yesterday who paid cash for his real estate investments. Okay, great. So the money that you had maybe working for you in an account is now in the real estate. Does the real estate appreciate? Maybe it does, maybe it doesn't. Now, you can use the real estate for cash flow. You can improve the real estate and perhaps it goes up in value, but we can't really control the real estate. And I know that is a popular way that people like to create either passive income or earn profits through the sale of real estate. So you just have to look at the big picture. I am a big believer in real estate. I've owned lots of real estate over the years, but you have to really understand who is in control. If you have a mortgage on a house or on a piece of property, who's in control of that house now? It's the bank, right? If you don't make the payment, what's the bank going to do? If you're late with your payment, what's the bank going to do? If you become disabled, how are you going to make the payment? And what is your end game with the real estate? Are you going to sell it? Or are you going to depreciate it over the years? When you do ultimately sell it, are you going to pass it on to family? Does your family want the real estate? What will they do with the real estate? At some point, you will have used up all your tax credits, your depreciation, and at some point, taxes will be due. So all of these things must play into factors that we consider before investing in real estate. And all of that takes education, it takes time, and it takes money. So that is one way that people like to invest. What if you could buy your real estate through an account that you own and control? So you were the banker. How does that sound? So you increase your profits, you increase your cash flow because you were able to purchase the asset, the real estate, through your own banking system. How about gold and silver? Of course, there's a lot of hype today about gold and silver, but how do you make money with metals? How do you do that? You have to hold it long enough. You have to sell it at the right time. It's like the old adage, buy low, sell high. So maybe you bought some gold at less than $1,000 an ounce. Now it's upwards of $1,400. Well, what do you do? When do you sell? And do you pay taxes on that money? What happens? What happens to the gold and silver when you die? How do you get your money back? Which are all questions that people have all the time with other accounts. So you have to ask yourself those questions. And what about cryptocurrency? Obviously there's lots of denominations, lots of ways. It started out with Bitcoin, and there's many offshoots of that. But blockchain technology, I believe, is here to stay. And it might be a place, if you can afford to lose some money, if you don't mind volatility, it could be a place to store money. But again, you have to look at the long-term game. What is your purpose? Why are you buying it? Is it for income later? Is it for pure growth? Is it for timing purposes? So you have to consider all of these factors before you park your money, before you store your money anywhere, because we believe that where your money is stored is much more important than the return that it earns. So when considering your own personal economy, you have to look at who you want in control of your money. Do you want a private financial system that you own and control, that your family can use, that you determine the rules, where you have independence? Or do you want to work under the Federal Reserve System, where they control the money, where they make the rules, where there can be tyranny because they can change the rules? Or do you want something that you own and control? So your personal economy versus a national or federal economy. Which do you want for yourself and for your family? Okay, so talking about our personal economies going into 2021 and what we can do to be successful with our money. So again, there's lots of questions to be asked that you have to ask yourself, that you want to ask about whatever account, wherever you might be storing or saving or investing your money. And these things are important. You want to consider the risk. You want to consider the outcome, the use, the ultimate reason why you want to own or purchase these particular assets or store your money in these accounts. So I hope you've gained some insight today, and I thank you for joining me. Go ahead and subscribe and click the little bell so you'll be notified when I have new videos. And I'd appreciate your comments or questions below, and I'll see you in the next video.